Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond at the Contrarian Trader. It is April the 17th, 5:05 in the a.m. Eastern Standard Time. What we're going to talk about today is the chart of Bank of America. We do have earnings season in full swing, and Bank of America reported earnings yesterday. We'll talk about that chart. Also, we'll talk about the pre-market activity, and then we'll segue over and into our watch stocks as well as some members stock chart requests, which is where I review the symbols that our gold members submit for me to review on video. But before we begin, I would ask that if you could please leave a comment, tell me what you would like to see on these videos, what I could do differently besides wearing a clown outfit or a pirate out costume with a patch on my eye with a parrot on my shoulder. I'm open to it, but I would prefer not to. Tell me what you want on these videos, please, and I'll be sure to incorporate what I can. All right, let's kick things off with earnings. We have the banks that are reporting earnings. Yesterday was Bank of America. Let's go to a daily chart first. You can see that BAC is right at resistance. We had broken out on the 12th, but that breakout failed on the 15th. Now what we're doing is we are flirting with a breakout yet again. Yesterday we had a bullish reversal day. Why is it not a bullish key reversal? It's because we did not close at the highs of the day. We were rejected yet again at the upper band of resistance. Now, 4-hour chart, you can see that yesterday morning after releasing earnings, they sold off. That was the knee-jerk reaction, and that's what I always caution members about when trading headline news. Frequently, the knee-jerk reaction is wrong. And traders yesterday dumped the shares of BAC only to regret it minutes later when we had a bullish key reversal on a 4-hour basis, and that set the tone for the rest of the day. We didn't pick up much more in terms of mileage because we had resistance directly above, but net on the day, it was a bullish outcome for the shares of BAC. So overall, a good day. Watch for a breakout here. If the markets continue higher, which it appears as though they will, given the pre-market activity, BAC should follow suit to the upside. Now, segueing over into the pre-market activity, let's begin with the S&P 500. Again, this is a 4-hour chart. These will all be 4-hour charts for the pre-market activity. We are up at current 4 3/4 points on the session. We are making higher lows and higher highs. I will warn that RSI is not the best here in that it broke down here on the 16th. And we have been attempting to rally back and recapture this prior support level in green, but we have been failing to do so. So does that mean you go running and dump your mutual funds? No. It's a 4-hour chart. So it all depends upon your time horizon. But what I would watch here is a break of this support level. What we have going on here on a 4-hour basis is a megaphone formation. So while the path of least resistance appears to be higher for the S&P 500, we have a warning flag on the track here on a short-term basis. Again, remember, these are 4-hour charts. Going over to the NASDAQ is up about 1/4 percentage point this morning, up 17 3/4 points. Unlike the S&P 500, we do not have a negative well, actually, we're beginning to get one now. A negative divergence on RSI. So I stand corrected here. It's not as pronounced or as established as the S&P 500, but it is beginning nonetheless. It all depends upon how we close out. Here, you can see it easier here. It all depends upon how we close out this bar here, which just opened up at 5 a.m. only a few minutes ago. Plenty of time to recover here. But just, again, another warning flag on the track. I would not be an aggressive momentum buyer today, unless, of course, you're experienced in using a trailing stop and you're going to get out really quick if this market falls apart. And we did see some selling into the close yesterday on the Russell small caps, and they almost flashed a bearish key reversal on the day. So just a warning flag. Let's take a look at the US dollar. Now, the dollar is a bit of a concern. I went over with members yesterday on Market Wrap that the dollar had broken out on a daily basis out of a bull flag setup. Now, I did warn that the stochastics on a daily basis were weak and appeared to be getting weaker. So somewhat of a divergence on a daily basis. But what matters most is price and then volume. Price was breaking out. Volume was very lackluster. But now, overnight, when you fast forward to a 4-hour chart and you see how we performed overnight, this is a basket case. We are again back down below the 97 level. We have broken out above this level and back down below this level several times over the past few trading days, and this is a cause for concern. If you are short of commodities, which do best when the dollar is strong, and I warned over the weekend on Best Stock Chart, I'll link to it at the end of this video, that the euro appeared to be gaining strength on a weekly basis. And here's a 4-hour chart, and you can see that we are very close to breaking out to a new weekly high on the euro. And I think if we get that follow through to the upside on the euro, back to the dollar is going to be breaking down below key support levels, and that will set the stage for perhaps, and I'm using the word perhaps for a reason, perhaps set the stage for a rally on gold, silver, the gold miners. Why am I using the word perhaps? Because we have seen in the past few trading days a correlation, not an inverse correlation, but a correlation in the price of gold and the US dollar, meaning we've had gold trade down along with a down day on the US dollar, not once, but on a few separate occasions. Now, that's not the price action you want to see. You want to see gold rally when the US dollar is weak. Now, this morning, we are seeing gold rally a bit, slightly, as the dollar threatens to break down here. But the weekly chart of gold is still ominous. Taking a look at silver. Silver's behaving a bit better this week than gold. You can see that on this 4-hour chart. We are putting in higher lows. Now all we need are higher highs. We need to break out above this upper band of resistance. So silver shaping up, but still a chart that is in a downtrend. Let's take a look at Bitcoin. Now, Bitcoin, which had a rough go of it here on the 15th, did manage to rally back. We had broken down below support. We rallied back nicely. I think that we're consolidating here at the 52.10 level, and we are setting up for a continuation move higher on Bitcoin. So we are long of Bitcoin. We will remain long of Bitcoin for the foreseeable future. Let's segue over into our watch stocks and member stock chart request. All right, let's talk about the GLD. Now, the GLD broke out here back in January. We consolidated along this support level, but so far this month, for the month of April, we are back down below this lower band of support. But as I always like to teach members, it doesn't matter where you trade intra-period, in this case, a monthly period. What matters is where you close. Now, if we close down below this lower band of support and we see a new monthly low for the month of May, look out below for the price of the GLD. That's a problem because that's a continuation breakdown, and this would have been a bull trap or a breakout point failure. Now, if we rally back and close above, let's say, the 121, the 122 level on the GLD, well, that would be a retest of support were we to close at that level, because we would have closed out this monthly period above this upper band of resistance. Even if we closed down on the month, we would have still done a retest and successfully defended a support level on a monthly basis. That's bullish stuff. So forget if the shares are down. It doesn't matter. What matters is where we close, and it had better be above monthly support. Now, drilling down to a daily chart, you can see that we have broken down below the March lows on the GLD. That is a problem, folks. Might we get a rally back here? Sure. We may be putting in a higher low here on the Stokes, but the fact that we are putting in lower highs and we continue to press lower on the stochastics doesn't give me much hope in the short term. When you take a look at the RSI, lower highs, and we have broken down below the lower band of this trading range on a daily basis. So some technical damage has been done here, and it can't be ignored. Now, when would I become a bit more bullish on the GLD? Show me a close back above the 121 level on the GLD, because that puts me back above a support level, not only on a daily basis, but in all probability on a monthly basis as well. So watch the 121 level on the GLD. Down volume yesterday was well above average. And if you have any comments, please, folks, leave a comment. If you watch this on YouTube, in the comment section below. If you disagree with me, give me a thumbs down. If you agree with me, give me a thumbs up. JNUG. This is a weekly chart. Thus far this week, we have a bearish key reversal on the week, and we are trading down below the March lows. This is a problem, unless, of course, we manage to rally back and close back above the 8.71 level. We closed yesterday out at 8.43 daily chart. Yesterday we closed at the lows of the day on volume, very similar to the price action that we're seeing on the GLD. So I would be very careful here. I would be looking for a bullish reversal day on volume. And I just went over the US dollar. You must see a break in the US dollar for a rally in JNUG, NUGT, GLD to get a set of legs underneath them and to begin to rally hard. PayPal, weekly chart. Thus far this week, we have a doji formation, the sign of indecision. We've had a heck of a run here. Daily chart. All right, so this is a chart that is looking tired. It's got exhaustion written all over it. What do I mean by that? Well, your Stokes, while still very strong, are getting a bit exhausted. There's not much room for them to go to the upside, and we are probably going to roll over here fairly soon. We have a lower high on RSI, and what we're seeing on a daily basis, and this is what really influences the RSI and the Stokes, is the fact that we are not closing at the highs of the day. And yesterday what we flashed was a hollow filled candlestick. You don't want to see a hollow filled candlestick at the top of a trading range, and especially at all-time highs. Why? It implies that you have indecision between bulls and bears, and that a pullback is near. Now, does that mean that PayPal is going to drop, it's going to go to zero? No, of course not. It's a pause that refreshes. The trend is still up here. We're not going to fight the trend. Up volume is dropping off dramatically, but to be fair, so is down volume. But net, this is a stock that needs a pullback. It warrants a pullback. I would expect a pullback. I would not be a buyer here of the shares of PayPal. We'll revisit it after we get an orderly pullback. Pulte Homes. Yields have pulled back these past couple of months, and Pulte has been breaking out. This is a daily chart. So we have an inverted head and shoulders setup. Left shoulder, head, right shoulder. Long consolidation here. This is when yields were pressing higher. And then we managed to break out here on the 5th. We did a retest. It held on the 10th, and then it was off to the races. The indicators look strong. Volume could be better here, but it appears as though the path of least resistance is to the upside. The only thing you need to watch out here is for yields, obviously, And another influencer is the wage gain numbers. Playing a weekly chart, pressing higher on a weekly basis, a very powerful chart. It appears as though on a weekly basis we are proceeding higher. Volume has been really good on a weekly basis. Let's go to a daily chart. Still a strong chart, but yesterday we sold off the highs of the day, and that's something that you really don't want to see. That's a sign of profit taking. So I wouldn't be a buyer here of the shares because the market is sending you a signal that you have some resistance above. Volume has been rising. Yesterday was above average, but keep in mind that we sold well off the highs of the day. We closed up about 1/3 of a percentage point, but we were up considerably higher. Yet volume rolled in higher. What that tells me is that you had some churning. Let's go to a 15-minute chart. I bet you that we have some strong down volume bars intraday, and there you have it. There's your selling, and there are your down volume bars. You did see some buying, which salvaged the day into the close, but yesterday would have been a very ugly day were it not for the final 15 minutes of trade for the shares of Planet Fitness. So a word of caution here that we are seeing some profit taking on Planet Fitness. And that is it for today, folks. Please, if you're not currently subscribed to my YouTube channel, follow me there. Click that bell button. If you want some free trade tutorials, go down below. Click on Bob's 5 most powerful candlestick patterns. That's a 5-part video series. Everybody have a profitable trading day, and I'll talk to you soon.